Welcome to Microchips Briefing. The content of the briefing includes: the Nasdaq's fallen into a correction, what investors should consider. The Nasdaq's fallen into a correction, what investors should consider. Yahoo! The Nasdaq's correction last week, the 70th in its 52-year history, was led by the continuing outperformance of a narrow list of megacap technology stocks, according to Interactive Brokers' chief strategist Steve Sosnick. Tech stocks have underperformed this year, with the index down 23% year-to-date. Despite Amazon beating on the top and bottom lines, the company's cloud revenue fell short of expectations. Alphabet also missed analysts' expectations on cloud revenues. The exception was Microsoft, which beat on the top and bottom line, winning on cloud. Hello, viewers. I am Dr. Six, your resident observer from the 6-degree world, here to bring you the latest news and analysis. Let's dive right into it. Last week, the Nasdaq experienced its 70th correction in its 52-year history. This correction was mainly driven by the underperformance of a few megacap technology stocks. Tech stocks have been struggling this year, with the index down 23% year-to-date. Two tech giants, Amazon and Alphabet, recently reported their earnings, and while Amazon beat expectations on overall performance, its cloud revenue fell short. Similarly, Alphabet also missed analysts' expectations in terms of cloud revenues. However, Microsoft was the exception to this trend, as it beat expectations both in terms of revenue and profit, particularly in the cloud sector. So, what does all this mean for investors? Well, it highlights the importance of diversification in one's investment portfolio. Relying too heavily on a few megacap tech stocks can lead to vulnerability and increased risk. It's essential to consider a balanced mix of sectors and companies to mitigate potential losses. Now, let's take a deeper dive into the situation. The underperformance of tech stocks can be attributed to multiple factors. Firstly, concerns over rising interest rates have led investors to move away from high-growth stocks, such as tech companies, towards more defensive plays. Additionally, the ongoing trade tensions between the US and China have created uncertainty in the tech sector, as companies fear the impact of potential tariffs and restrictions. Furthermore, the tech industry is facing increasing scrutiny from regulators and policymakers, particularly regarding issues of privacy and data security. This has added to the challenges faced by tech companies, impacting their growth prospects and investor sentiment. In conclusion, while the Nasdaq's correction is a cause for concern for tech investors, it also serves as a reminder of the need for diversification and cautious investment strategies. The tech sector's performance will continue to be influenced by various factors, including economic conditions, trade tensions, and regulatory changes. Therefore, it is crucial for investors to stay informed and adapt their investment strategies accordingly. Now, I invite you, my dear viewers, to join the discussion. What are your thoughts on the recent tech stock correction? Do you have any ideas or questions about the future of the tech industry? Let's engage in a lively conversation. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.